Market sentiment, in other words, what the masses are thinking about it. As Mark Twain said, the majority are usually wrong. So once again, it's the charts that will tell me whether it is worthwhile. As you probably know, we just gave an example of supermarkets that were a hated segment and that everyone's now buying at Aldi or at Marks. There's no hollowed out the middle ground, and everyone's making that narrative. Once it gets overdone, you can have a rally. So I have been involved in things that are largely judged by people who are now responding to the news as quite an unattractive segment. And that's usually because that hand has been overplayed now and it's ready to bring back some of its value.
Okay. What do you think about trading companies with very high valuations? For instance, AO World had a prospective PE of 83.1.
So I trade technically. If it's given me my setup, I'll consider it. If it isn't, I won't. I certainly won't. From a savings and investment point of view, if I were buying individual shares, I wouldn't chase things that have very extended PEs generally, unless I truly understand the industry. In most cases, you get a revision downwards. Google traded at extended PEs for a long time and continued to go up. So you can't always universally say some of them are true growth shares and will make an immense amount of money in good time. But broadly, tech isn't a skill set of mine, and so I wouldn't necessarily go there.
Would you buy shares into a company whose shares are seriously under pressure?
Yeah, well, shares that are under pressure potentially just mean that they've become unpopular. And that's a sentiment element. If you mean under pressure that they are currently capitulating, I generally don't, because I'm a technical buyer. So anything that's capitulating is capitulating for a reason. So I'll trade on a pattern. In a savings and investments context where there's no leverage involved, it's possible, but I'd need to feel that I had a view or an edge for it to be done. In a leverage sense, I certainly wouldn't. I'd only use my trading strategy. So in a leverage sense, I'm quite consistent with that.
Okay. And what about your thoughts on shorting companies where the shares are in a falling trend?
Yes, so we've shorted supermarkets recently, and then we've even turned and bought. Morrison's was an example. We traded on the downside, oversold, got really impulsive after results, set up a continuation pattern and bought it. So we're quite indifferent. If it's giving me the setup I need, I will trade it. And the irony is, this is the great nature of technical charting. The downside pattern was here and had key levels. It broke down to there. It then impulsively broke back up, ran into the same pressure that it had when it was at that point, set up a continuation pattern, and then broke above this level. So basically the price behavior was saying, hey, I'm stuck on a ledge here. I'm winding up to break down. Bang, when I was coming back up, I ran into the same key levels of significance, and I needed to wind up to break above that. So we traded at the same level, once to the downside and once to the upside. And the downside came first when everyone was beating supermarkets up. They overreacted, and it came back up, and we took it for another move on the way up. So it's just entirely based on the setup. But the irony is, when I look back at it, I'd say, well, they were overreacting on the one side, and we rode that and got out before it bottomed, and we took the recovery rally as well once it was on the upside. So it's just ironical. The technical analysis gives you an interesting view. I often wonder what the fundamentals are after I've done the trade, because you always get the story retrospectively, and that was a bit like the Eurozone Greek crisis, where we were short the euro very strongly against the Swiss franc on a very tight setup. And I went away on holiday, and that trade unfurled during the course of January. And you just come back and your trades move substantially in your favor, a really big long-term currency move, and it just kept rolling. And I mean, I had to sit through the SMB then saying they will come in and they will peg the currency and they will allow this. And at that point they didn't. That was at the 150 levels, and then it went lower, made my target, went lower still. And then eventually they did peg the currency now, or they floored it rather than pegging it at 1.2. So it's really interesting. But you wondered what the narrative was in November when I was placing that trade. And then in January you had the whole drama of Greece, then later the other southern Mediterranean states and they unravel. So you were part of the major news flow and you were profiting from it in hindsight. And that's once again a time when you're having that elation, you just say thank you to the theory, the body of work. You know, you don't start giving yourself high fives on that, because you're just going to throw it right back into the market and give it all back.
Will you buy into shares that are making all-time highs?
Yes, could do. If I get a nice continuation pattern after a new high. Often as you approach a new high, you get one of my setups. So in other words, the market knows it's going to make a new high, and it says, well, not sure, we need a bit of extra puff to do that, winds up a little bit and then smashes into it. Certainly would do, but that's once again giving me my criteria. I wouldn't just buy it because it's made a new high. There's some people on the trend side that say they would, but the point is, where's your stop? If it's been in a straight line since £10 ago, and the last time you had a technical support point was way down there, the risk isn't worth the reward. How am I going to know that it's going to do another £10 or £20 plus to the upside? So on its own, no.
Is it a good idea to hold stocks even if the overall market is overvalued?
That depends the situation you're in. If you're in a savings and investment mode and you've committed to 10, 15 years or 20 years to retirement, and buying the stock, buying incrementally into the stock market on a monthly basis, you will go through periods of overvaluation, undervaluation, and the key game for you is to be a net accumulator and averaging out your entry cost and building a genuine position so that you have a savings pool. So individual periods of market valuation become less significant if you're trading over decades.